G'day there, Ray Corcoran here. So in this week's video, we're going to be going over interest rates. Interest rates are going up quite quickly in Australia at the moment. If you believe anything the media is telling you, you probably think the sky is falling. But in this video, I just wanted to unpack what's been happening in the past and in the lead up to today with interest rates, what's happening right now, and also what do we expect to happen in future with interest rates, and what does that mean for you as if you're someone that is either A, looking to buy a house, or B, you already have a house or multiple houses and you're maybe concerned about the increasing cost of high interest rates. And this is a very interesting topic for me because I have a property portfolio and I've maybe unluckily just bought a house in Sydney. We bought our family home on a variable rate. So I'm very interested in to see what happens with interest rates over time and especially in the short term. And before we kick off, let me know what interest rate you're on. If you have property right now or you have a property portfolio, what interest rates are you on? Are you on fixed, you're on variable, a bit of both? Let me know in the comments. I'm always interested to see. And also, if you're gonna be doing anything different as a result of these interest rate rises, please let me know and share what you're doing. So what's happened so far? So the cash rate is the interest rate that banks and lenders have to pay to borrow money. It's set by the Reserve Bank of Australia, and their job is kind of to oversee the monetary policy in Australia and generally ensure that the monetary system in Australia stays as strong and as stable as possible. And once a month, except in January, the Reserve Bank will meet and over a cold beer and a schnitzel, and they'll go over monetary policy in this country. And also, one thing they also do is go over the cash rate and decide whether to either increase it, decrease it, or keep it the same. So they'll either raise it to keep inflation under control, or they'll decrease it to stimulate the economy and increase spending and more borrowing, or they'll keep it the same if they're generally happy with how things are going and they don't want, they don't see it fit to make any changes. Over the last decade, the cash rate has been generally declining. So people have kind of enjoyed cheaper and cheaper interest rates for quite a while now. It's been a while since we've had really high interest rates, but that party potentially is coming to a close. And the Reserve Bank recently has started to increase the cash rate once again. However, in May this year, the cash rate had its first change in over a year. It went from 0.1% to 0.35%. And then the next month in June, which is this month, we've had an increase of 50 basis points, which you probably would have seen all over the media, to take it from 0.35 to 0.85%. And the main reason they're doing this is that inflation is creeping up, and it's not as bad as in other advanced economies, but it is increasing and it is becoming a bit of a concern. So the Reserve Bank has seen it fit to increase the cash rate. And some of the reasons for that inflation, it's war, it's supply chain issues that are lingering from the last 2 years, even locally stuff like flooding, a tight labor market. There's a whole bunch of different factors that are causing an increase in prices, and there's just not enough goods going around. The Reserve Bank did say that they expect this to subside next year, but take that with a grain of salt because they typically change their mind quite a lot. Well, I do generally also expect that to happen, but who knows? The world's been pretty crazy the last 2 or 3 years, so we'll see. And as of right now, in June 2022, they generally feel like the economy is pretty good. The economy did grow in the most recent quarter by a little bit. And overall, I think they are mostly happy with how the economy is going, especially given the circumstances. So I think that they are, that they were very generous during the COVID times, but now they're starting to be like, we need to start increasing the cash rate. And that will flow onto you if you either A, want to borrow money for a house, or B, you already have a house, your interest rate will go up because the banks will typically pass that on, usually in full, sometimes not full if you're lucky. So what's going to happen next? Are we going to keep having 50 million rate rises? Well, the Reserve Bank in their statement on the 7th of June, they did say that they do expect further interest rate rises, that will be happening. They do. I get the impression that they want to do a number of quick rate rises. And I think I heard Governor Philip Lowe, who oversees the Reserve Bank, he did kind of allude to the fact that he almost wants to scare people by giving a couple of quick big rate rises to sort of shock people and make sure that they, to sort of curb inflation and all that stuff. And now a lot of people are actually saying that they think the Reserve Bank will do a number of increases before the end of the year, but they will have to revert to some decreases in 2023, especially in the second half of next year, because they think that the economy probably won't be able to sustain that. Now, is that true? I don't know. But for me, I would not be surprised if the interest rate, there's a few hikes and then it kind of pulls back again. But what happens next is sort of anyone's guess. And the Commonwealth Bank, which is, I'm pretty sure, Australia's biggest lender, they have actually forecasted interest rate cuts for the second half of 2023. So if that is how it pans out, then maybe some of this rate rise increase will be temporary, but we'll see how it goes. So what am I doing about it? For me, I've got a number of regional investment properties, as well as we just bought our family home, which may have been horrendous timing, but it is what it is. Our house was $2.73 million. The loan on it is around just under $2.2 million. So the rate rise, I haven't really calculated it. I probably kind of don't want to know, to be honest, but I think it'll work out to be, a few extra $100 a month for us. And I'm expecting that to be, to continue to grow with another few rate rises. But for me, I kind of focus on what I can control. I can't control rate rises. I can't control inflation. I can't control, the economy and all that sort of stuff. So for me, I'm really focused on being productive myself. So bringing in as much money as I can, working as much as possible, making sure I've just recently reviewed all my finances in terms of personal finances and my company finances. My spending is pretty low anyway. So there was a couple of little things to cut, but nothing substantial. But I did just double check that, and I'd recommend that, if you want to review that yourself, I'd recommend that. Another thing that we did was I went back to my mortgage broker and put in a pricing request with my lender. And what they do is they kind of just check if, basically check to see if they can do a better rate. My family home started off at 2.19% variable with ANZ, and it went up to 2.44 for the first rate rise in May, I think it was. And then I put in a pricing request, and that went from 2.44 to 2.4, which is a small discount, but I'll take it. And then now we've got the rate rise of 50 basis points, which I expect them to pass on in full. So that will mean that my rate will be 2.9%. But by the time I publish this video, who knows, it might be 12% interest rates. Like it's just, it's crazy at the moment. So I'm expecting it to go up, several more times between now and then. For me, I'm just building up a bigger buffer than I have before as well. In the past, because I have low expenses, I haven't really had a huge buffer in place. It hasn't really been necessary because my outgoings have been low. Since we got the family home, obviously we've got that large repayment now. So we will be keeping a bigger buffer than I have in the past. And if we do choose to have another kid, then I'm going to need extra buffer for that as well. So that's sort of my personal focus right now, is like not letting any money go out the door, bringing in as much as possible, working as many hours as I can, and servicing my clients and just trying to do everything I can for my customers. And then, with the difference, just continuing to build up a buffer. But in terms of like all the media and the hype and the dramatic, sort of stuff, I put a bit of a silly thumbnail for this video. I'm not buying into it too much. I can't control those things. I really focus on what I can do day by day in my house, and that's sort of all I'm focusing on. Let me know your thoughts. Hope you found that useful. If you have any questions, let me know. And I'd love to hear your thoughts in terms of what rate you're on right now. Did you end up fixing your rate? And are you doing anything different as a result of everything that's been happening in the economy and all the rate rises and a bit of, doom and gloom with people saying there could be a recession on the horizon and that sort of stuff? Could, stuff in America affect Australia? Would love to hear your thoughts. Let me know about that down below. And I'll see you on the next video.